Euro dollar long-term forecast for the week of May 14th, fxempire.com. The euro dollar has had a miserable week. The gap from the weekend was brutal, and the fact that it also acted as resistance does not bode well for the future of this market, at least from the bull side. The 130 level is now a thing of the past and should be resistance. The fact that the candle has formed as a shooting star just underneath this massive triangle suggests that the bearish momentum is picking up. With the elections in Greece having seen a lack of consensus, except for the fact that most of the parties put into power were anti austerity, does not bode well for the situation in the European debt markets as well. The Greek people basically have seen the austerity put on them as an invasion of their sovereignty by Berlin, and as such, one really shouldn't be surprised by the elections. The breaking of the 130 level is a big deal. There's been a lot of talk about Asian banks, central banks that is, being involved, and the leading candidate, of course, are the Chinese, as they have diversified so much of their holdings away from the dollar. The fact that the euro is starting to sink against that is a loss for them, so it makes sense that they would be interested. Plus, Europe is the biggest market for the Chinese. If the euro currency starts to sink, that really hurts their competitiveness in that area. A break of the bottom of this candle suggests to us that the bearish momentum picks up even further, and we think that 126 is almost assured at that point. The triangle itself, though, measures to 125, so we even think that we could go lower. 126, though, does look like it could cause the bears at least a bit of trouble for the short term. Again, we are selling a break of the lows of the week. As far as buying is concerned, we see absolutely nothing in this chart that suggests we should be considering it at this moment.